Today, I'm going to share with you my stupid simple day trading strategy. This isn't some recycled setup floating around YouTube. In fact, I haven't seen anyone else teaching it yet. I learned this from a professional trader in Germany while I was living there and working for him. Traders from all over Europe came to him to learn his methods, and now I completely understand why. His approach helped me stop second-guessing the market and finally see it through a completely different lens. Clear, simple, and most importantly, profitable. But you know what? This approach didn't just help me. I've watched traders I've shared that with go from inconsistent and scattered to consistently profitable and confident. By the way, my name is Sylvia and I've been in the trading game for over 12 years now. It's wild, I know. Trading has definitely given me more gray hairs than I want to admit. In the beginning, I was a total mess. I spent nearly 3 years trading the typical patterns you can find online. Breakouts, flag patterns, only to realize that most of it is complete BS. I was piling on indicators and constantly hunting for confirmation. I thought the more confirmation, the more certainty. But guess what? The only confirmation and certainty that I got was my bright red P&L every single week. That was the first time I started thinking about quitting. I thought, I'm not cut out for this. This must be rigged. It's for people with big accounts and people with insider information. Then one day, Dieter, the trader who I was working for, showed me something so simple it almost felt wrong. It went against everything that I've learned, and I will walk you through that just in a moment. But I'll be honest with you. The first time I saw that, I thought this is way too simple, it looks way too risky, there is no way that actually works. But the more I watched him every day, I realized he was winning every single day. And he was in the trades before anyone else, like if he had a magic ball or something. And I was always thinking, how can he know that? This is impossible. But he had a repeatable process, and it was built around something I had completely overlooked. And once I finally started using that process, everything started clicking. The strategy he used was called the Unsharp. And now I'm going to break down the framework into 3 simple steps. But before we start, let me show you what I was doing wrong, because chances are you might be doing it too without even knowing it. I would open up the chart and I would think this looks like a very nice uptrend, higher highs, higher lows, and that right here looks like a very nice flag formation. So in this case, I would put an order right here and try to enter as soon as the market breaks out of this flag, thinking that we're going to see a continuation higher. So I would put my order right here for my entry, and I would put my stop loss right here underneath. But here is what would typically happen next. Boom! Got stopped out. The market reversed further lower, and even though everything looked very nice, bullish and safe, all of a sudden we have 2 big red candles out of nowhere, and I would end up with losses. This would typically frustrate me, and I would not understand how come I'm dancing around profits and not able to catch a single move. Meanwhile, Dieter was already in the trade right here as everything looked red and bearish. And I kept asking myself, how come I'm always a step behind? It was like he could see the reversal before it actually happened. He wasn't reacting to confirmation. He was spotting the move and the trap before it actually happened. And that's exactly what the Unsharp framework is all about. It's a very specific way to enter the trades before the big move happens, before the pattern actually develops, without waiting for confirmations, breakouts, and textbook patterns. It is built around understanding how the market traps retail traders and how smart money steps in to reverse it. And now let's get into the 3 simple steps of that process. So step number 1 is identifying the sucker move. So what exactly is the sucker move? It's an emotional move that is specifically designed to suck traders in and trap them on the wrong side. Think of it like stop loss hunting. Let's take a look. As we can see right here, we see a few red candles in a row, and especially this last red candle looks pretty convincing. It looks like it's breaking here through the lows, and it looks like the market wants to continue further lower. It looks very bearish. And if you were long, you would think the market wants to continue further lower and you would be stopped out. And if you're about to short, you would think that's a pretty good setup because bears are in control, a lot of selling happening, lower lows, lower highs. But let's take a look what actually happens. The market actually faked this breakdown right here just to grab liquidity and reverse immediately to the upside. A strong, powerful move up. And that's exactly the trap. Let's take a look at another example. As we can see in this example, we have a fake breakout. The market reverses immediately to the downside, and we see a bunch of red strong candles in a row to the downside. Same thing here. You would probably think the market wants to continue further lower, but here's what happens though. The market shoots straight up to the upside and fakes everyone out. Now our job is to start spotting these powerful reversals so that we can catch these big moves like that right here and stop being faked out. But now, how do we know that is actually a trap and not a real breakdown? Because let's face it, it can happen. Sometimes the market is going to turn around and will continue further lower. And this leads me to step number 2, finding key reversal zones and levels. Now that we know what we're looking for, is crucial to understand where it happens. The sucker move isn't some blip happening random on the chart. It happens mostly around key levels. That's why we want to know how to find them. We want to be trading around these levels and stop chasing random candles in the middle of the chart. So how do we exactly find these levels? When you open up the chart, you want to look to the left and mark the previous low and the previous high. That right here was the previous low, and that right here was the previous high. Also, you can do that on any time frame: 5-minute, 15-minute, 1-hour chart, 4-hour chart, daily chart. It does not matter. Just remember, the higher the time frame, the more accurate your trade. Now that we marked these zones, we have 2 simple rules. We want to buy at the low of this range and sell at the high of this range. We're not going to chase any flags or breakouts in the middle of the chart. So why are these levels so important, and why do we want to enter and exit around these zones? Think of like the lows, especially the previous lows, represent the biggest amount and most committed buyers. They see that zone like line in the sand. That's why they're ready to protect this zone and start putting buy orders around this area. So if we're looking to buy, this is the area we want to be watching. The highs, on the other hand, is where most sellers step in. They are defending that resistance, taking profits, and looking to sell their positions. So instead of buying the breakouts or flags into this area, we're now going to sell at that zone. Let's replay that right here and see what actually happens. As we can see, buyers protected this area and pushed the price towards the upper part of the zone. And as we can see right here, there are more sellers stepping in because the price was struggling to continue further higher, and we saw a little bit of consolidation and rejection. Now here's what Dieter was doing. He would start placing buy orders, multiple buy orders around this area without waiting for any confirmation or candlestick closures or anything like that. He would just start throwing in buy orders around that zone. And I remember thinking, this guy must have a death wish and he's trying to catch the falling knife. For me, at the beginning, this did not make any sense at all. But what I did not understand back then, that he was trading only the ES futures, only that instrument, and he was only buying it. He had real statistical edge. because most of the time the S&P 500 goes to the upside. That is why he was just putting his orders around these important key zones at the lows and not really waiting for confirmation. Now, personally, I couldn't do that, and I was always very afraid just to start throwing in buy orders without having a little bit of confirmation. This is why I modified that strategy a little bit, and I was looking for something very specific, which leads me to step number 3, looking for the John Wick candlestick. So what exactly is the John Wick candle? Now that we know we have the sucker move and it's a very important key zone, we're looking for that last piece of the puzzle that gives us a little bit more conviction that there are more buyers stepping in around this zone. So the John Wick candlestick is a candlestick with a long wick and typically a small body. But why is that important? It's important because at some point this candlestick looked actually like that. This right here was the low of the candlestick and it looked red, but eventually buyers stepped in before the close and start buying up the price, and it closed with a long wick and at the high right here. So basically this is giving us the clue that there are more committed buyers stepping in. And again, if this happens right around that key zone, this is our sign that we can enter the trade. It's also showing us that smart money and bigger buyers are stepping in. Why do we call it John Wick? Because this candlestick does not mess around. If it shows up right after a trap, it flips the direction hard. So let's take a look at this chart. This right here is the S&P 500 ES futures and the 15-minute chart. And we see right here our sucker move, a few red candles in a row going straight into the previous low that we can see on the left. Therefore, I'm going to mark that low with a line right here, and I'm going to mark the high with another line as well. We see also that we have a bigger wick on this candlestick, indicating and showing us that there are more buyers stepping in and more committed buyers. Now, sometimes the price can stop before that low and before that exact line, and sometimes it might break slightly below. We're not working with a ruler here. Again, that's how trading works. We need to observe the price action. But I want you to observe this wick right here, because I'm going to hit the replay button and we're going to see what happens. Boom! Price shoots straight to the upside. Again, it went into this key zone right here, which was the previous low. It did not quite test the low, but we see that wick showing us that buyers stepped in and immediately reversed to the upside. Here is another example of our sucker move in combination with a wick on the bottom of that candlestick. We see that right here was the low, the price slightly broke below this time, and we see that wick of the candlestick. So this candle right here indicates that buyers are stepping in, trying to protect this area and trying to reverse this area. Now I'm going to hit the replay button so that we see what happens next. As we can see, the price immediately reversed. It had one green candlestick and it continued further higher straight towards the high that we marked. Now let's jump into a few live trades so that we can see how that exactly looks like in real time. This right here is the Nasdaq NQ futures and the 5-minute chart. And just before the market opens, I typically draw a line around the previous low. This is going to give me the clue where is the line in the sand and where potential buyers might want to step in and protect this zone. As we can see right at the open, the market went straight up, a typical emotional move, and now we have 3 red candlesticks in a row. So now I want to be observing what is going to happen next. I want to see if the price goes straight through this zone and if we're going to get our John Wick candlestick confirmation so that we can open a long position and long trade around this area. Now I'm going to hit the replay button so that we can see what happens next. As we can see, the market went straight through that low right here and it immediately reversed. that wick right here shows me that they're more committed buyers trying to protect this zone. Now, I personally want to see one green candlestick first before I enter the trade. This is giving me a little bit more confirmation that buyers are protecting this area. Now that I have one green candlestick, I'm going to hit the buy button and I'm going to place my long trade. My stop loss is going to be placed slightly underneath. As I mentioned, I'm just moving the stop loss right here and I'm going to observe the price action and see what happens next. Now, because we're moving towards the upside, typically I want to be quicker out of the risk and I'm going to move my stop loss right at my entry, which is around break even, so that I am out of the risk and don't have to worry about this trade anymore. I really love this technique, and especially for beginners, it's a great way to be out of the risk and out of the emotional state. Now, I want to see how the price action reacts to this zone. If we continue further higher, I'm going to let the trade work and develop and slowly move my stop loss underneath each low. As we can see here, we have higher highs, higher lows. Therefore, I'm just going to move my stop loss below that low and let the trade work. Now, because we're heading towards the end of the day, in my case that is 1 p.m. on the Pacific coast, I want to close that trade, call it a day, and we'll come back tomorrow and see if we have a new opportunity. For that, I'm just going to move my stop loss very tight below this red candlestick right here. As we can see, I got stopped out. That was a very nice trade. It looks like the market continues higher, but I'm totally fine with that. This was a very nice move from the bottom before it actually happened. And I'm going to see if I have another opportunity the next day. Okay, now I want to share with you one more example. And this right here is the YM 5-minute chart, the Dow futures. And I'm following the same process. I'm going to mark the previous lows and see if we can get our sucker move around this zone and if we are going to get a nice John Wick candlestick. So for that, I'm going to mark this low and this low. These are the two previous zones that act as a line in the sand and where potentially buyers can step in. Now I'm going to hit the replay button and we're going to see what happens next. As we can see, we see a little bit of a consolidation here, but the market goes straight down into this area. There are a few wicks right here, but this is not a clear John Wick candlestick. As we can see, these are candles with wicks on the top and the bottom. Therefore, there is nothing for us to do at this moment. We're going to see if we go through that zone and this area right here and if we get a better opportunity. And as we can see, we finally broke through that low right here and we see one small wick here, but this time without the wick on the top. Now we see another wick here, and this time this looks like a decent John Wick. So again, this is giving me the confirmation there are more buyers stepping in, trying to protect this area. And I'm waiting still for one green candlestick before I enter the trade. Finally, we got one green candlestick and I'm going to place a buy order and put my stop loss just right here underneath. I'm placing my stop loss right here and now I'm going to observe what happens. And if we continue further higher, this right here represents the high of this move. Therefore, this is going to be my target. Now that the market continues further higher and it looks like we're breaking out, I want to move the stop loss below the low of this swing right here. This way I'm out of the risk. I don't have to worry about it. And if we reach this zone, which is happening right now, I am just going to exit that trade. For that, I'm just going to trail the stop loss below that wick of this red candlestick. And now I'm going to hit the replay button again so that we see what happens. As we can see, the market is trying to reject this zone. I got stopped out. Even though this continues further higher, I'm totally fine with my trade again because I caught it right at the bottom right here. Very nice fake out, very nice 2 wicks on the bottom. And this was for me the confirmation that buyers stepped in and reversed the price immediately. This right here was a typical fake out setup. It looked like it's breaking down, but immediately reversed to the upside. So I hope this video helped you a little bit to understand how to get into these moves and reversals before they actually happen, and how to use the Unsharp framework in your trading. Feel free to try it out. And by the way, if you haven't subscribed to our weekly gains guide, we release each week the exact levels of the US indices that we're watching, and also swing trading ideas on growth stocks. Feel free to join. The link is in the description. It's totally free. And I'm looking forward to see you back here on our channel again. Bye for now.